All right, good afternoon. Let's do an end of day review for today. And today is Monday, September 11, 2023. So September 11 is a special day in the US. So it's the anniversary of the September 11. I think it's 2001, so 23. So 22 years ago. Wow. It sounds like yesterday. But anyway, today we have a very interest Monday, right? But look at the economic calendar for this week, so we can have some perspectives to see why the markets behave, this way. And we know that, look at the calendar, we know that we have a huge, high impact news this week. We have a CPI release on Wednesday, which is September 13. Remember the date 13, right? 1-3. That's a special date right there. 9/13. So will be 13. And then we have the so-called quadro witching right here. No, quadro witching. Basically it means that the option expiration day is expired on this Friday, the first Friday of every month, but on March, on June, on September, and December, it's special because it's also not only the end for that month, but the end for the quarter. That's the reason why they call triple right there, quadro right there. Being called quarter, so the quadro right there. You see right here, special. Right here, you see. Cliff is by December, June, January. Right here, we have the end of quarter right there, and then we go with the next quarter right here. 3 months. In March, June, September, and December. Yep. And look at today, we gain about 0.67%, right? Zero. And the volume is not really high, right? And the reason is just Monday, and we have a huge data come on Wednesday, which is 2 days from now. That's the reason why you see this is a 5-minute time frame right here, 5-minute time frame. So it's open at 9:30 right there, and first candle is up close, but after that it moves sharp down, and then it just goes back to the 9:30 right there. And then you see it's just open just above there where the high is. Okay, let's look at review of the trade, the practice trade that we took this morning. We only took one trade, but we learned a ton of things, right? So the easy trade we take, easy, yeah, only easy. That's the mindset right there. You have to believe that the trade is easy. Easy does it. Okay, just look at this chart, right? We enter right here at 10:37, and what do we see in this picture, in the chart? Well, we see that it take out both buy sell liquidity right there, but sell liquidity it was taken right there. Yeah, hostage service was taken also. And as soon as we saw make a high low, we thought that gonna be a market trend structure, right? And it went back and retest the order block right here, and follow gap. So we go in. That's our our logic right there. And our target will be open at 9:30 buy sell liquidity up there, right here. And the risk reward is $1.23. I think we reached about 30 cents. So I think our initial, yep, I think we forgot to put in there 30 and $1.27, right? No, 23. So it's roughly 1 to 4 residual ratio, which is good. We only take the trade that when you get at least 1 to 2 residual ratio, and we want to reach around 50 cents. That's the most we want to reach right now, our rule. So we learned that. Okay, now look at this in the hand. You see what we learned. So we go in right here. 10:37. Okay, now go back to the chart to see how it works. Okay, 10:37. Right here, we go in this candle. We have order block, right? Federal gap and a retest. It takes the buy sell liquidity. That means it willing to go up, and it's at the retest. The perfect scenario for it is going to be right here, and then it can continue to go up. However, it did not happen. It do one more sweep. You see the buy side. It sweep one more, social liquidity. See, sweep right there. It take out a low of this one, and then it make a high low right here, right there, and that's where the reversal come from. And here's the retest right there. So you have order block right here with federal gap. You don't have complete, you have federal gap right here, order block, and you have federal gap maybe here to here, and then this is the retest to this order block. So our trade now we can see that this will go in right here it early. Okay, so we learned that we got the early entry right there. We have to wait for one more wait for one more social whip. The reason that it makes sense, because you remember we marked down this level before it start at 9:30, we mark the risk level. We say, wow, it should need to go and sweep that sell side liquidity before it go up. You see, right here, this sell side liquidity. Yeah, we should wait for one more. And you look at the 5-minute time frame, you can see it makes sense, right? It will go in right here on 1 minute, which is around 35 here, 37 on 1 minute. But it doesn't make sense because I haven't made a high low yet. Alright, it haven't made the retest yet. And here's the retest one more time. Sweep the sell side liquidity one more time, and here's the retest. So we should go in around here, 11:45 instead of 10:35. So another 1 hour later. And that's the lesson we learned. And also we say that the buy side liquidity were a drop. It's not so obvious, right? The better entry is 11:03. You see, we have to let the trap to play on. When we go in right here, you don't see any buy side liquidity drop yet. The drop up here, but it's kind of not obvious. You want the intermediate term drop right here. And we also see they set up a sell side liquidity drop, so that means they're gonna check. They set sell side liquidity drop and then buy side. If they're gonna go and take the sell side liquidity drop, you have to wait. When you see both drop right there, then you have to wait for the next move, which is to see which drop you're gonna, which liquidity gonna take. If you take the sell side liquidity, then you get ready and go in and go long when it retests right there at 10:03. And we did mark this key level. You see how beautiful is that? It's going and rate that sell side liquidity right there. It check all the buy side liquidity here, and then also rate the liquidity at this key level. That's the reason why when we go in the market, we saw this kind of candle form. We know it's a mark. It's a signature that algo leave behind. That if you're gonna take the buy side liquidity of that candle, the next step you're gonna take the sell side, and then it's gonna revert back because it's a Monday. You not expect that it's gonna be the range. You go into the range right there, buy side and sell side, and then go back again. Especially it's the Monday before a big news release, that's called high impact news release. The Monday always to be in the range. So that means we take the buy side, gonna take the sell side. It's not gonna break down at all. It's gonna be bow back and forth between those range right there. And the range we all identify. I mean, on a 4-hour time frame this morning, right, when we do the first hour, we identify right here. I mean, on the 1 hour, we identify this range right here. So it hits this level, then it goes to this level, bow back, and it go back. You see, we did anticipate this move. We're gonna, if right here, if a rejection, then it's gonna go down and take this sell side and then bow back. If you want to remain bullish, exactly, it bow back right there. So we quite, accurate in, anticipate. But the lesson we learned is that we are going just a little bit early. We should wait for another 60 minutes later. So that's another note we look. we have to make sure it's sync up, right? If we want to go in 1 minute, make sure that 5 minutes also good setup. Because we go in 1 minute right here and it fall into this 5 minute right here, it doesn't make sense. You have to let this down move finish, and it will finish right here after it take the last sell side liquidity trap right there, or so-called last sell side liquidity sweep right there. So it create buy side signal taken, that the perfect go in and go long on a retest, and it set a huge buy side liquidity drop right there, and then you go in, you know that you're gonna go and take it. You see that? Go all the way there up and take it. So basically the better entry test right here, retest. Also we wait until you take the sell side liquidity of this key level that we identified before the open. That's the beautiful setup right there. So this, yes, the candle at 4. So another thing we have a clue is right here. The smart money division around that time, right? About this time, that can give a clue right there. And also we learn that we need to mark the up close. Candle and 4 o'clock. We believe that is our signature. If at open, right, it check the buy side liquidity, then we should anticipate it will take the buy side, I mean the sell side liquidity of this candle and then reverse. Okay, let's look at right here at the 11. You see the divergence start forming right there. So basically we have the QQQ make a higher low and the SPY make a lower low, just lower, just a little bit right there. It's almost equal low right there. Then we know that normally, right, we assume that the QQQ is weaker and more volatile than the SPY, so it should make, you know, a lower low. But in this case, it failed to make a lower low. It failed to go down. That tells you that SPY will not go down either. So this move is just liquidity rated. It's not gonna be a market structure shift. It's just liquidity rated. Then it's gonna go up. That means that it's a good time for to go in and go long on the SPY, which is, you know, fall into the low time frame setup, perfect for that. Order block, fair gap, free test, go up for that right there. That's the confluence we have right there. Well, that's the beautiful setup that we learned for today right there. Let's see what else we learn from this beautiful setup. Wow. We need to mark this candle. This is very special, the way it formed right there. So that means that we will anticipate it's gonna retest the high of the candle, and it did exactly. Wow, look at that. What is the high of the candle? 52. Look at this. It's 50, right? 50, 52, just around right there. Look at that. And that's also in this fair value gap right there. Wow. See that? And that's the London also for. You see the fair value gap right there, and retest that fair value gap right there. So basically you have a swing high right here, it's a bullish breaker and fair value gap. So you come back and retest that fair value gap right there. Wow. Basically you have, so the long setup still play in here in 1 hour. Bullish breaker, fair value gap, and check the buy side, and then boom, the retest. That's it. So the bullish for this setup is still in play. You can go long. This morning we don't see that. Okay, let's mark it right there. So we do have this bullish breaker, right? Fair value gap, retest, and it's a long setup. What you're gonna see? Yep. You want to see the sell side liquidity was taken, and when we see the buy side liquidity was trapped. It did. We do have right here is the bullish breaker. It's very special candle. Whenever you have a long wick, it's a special candle right there. It tells you something about it. It's a signature right there. Yeah, you do have a buy side right there, right? And then you have a sell side with a drop right there. I mean buy side liquidity. So we'll add one more note in our lesson learned, that on X1 we do have we do have a launch setup, which is bullet breaker, in this case paragraph retest. All right, that's one of the only trade we check. Okay, now I want to go review how do we miss this, you know, beautiful dark move right here. How do we miss that? Well, we don't see any setup right here. We just see auto block, but we don't have any paragraph, right? You don't see it. Let's click this auto block, and then boom, boom, and this one is leave onward. There's no retest for us. It gives us no entry at all. The only thing we are see right here is the key level on high time frame, which is on X4, which is 4-hour time frame. This is the key resistance level or supply level, or this case is a bearish breaker. All right, let's look at the 4-hour time frame. Yeah, this morning we point out that level right here, right? It's swing low, and it's a bearish breaker right there. So it's retested, right? You see bearish breaker, huge displacement fatal gap, and this is a retest of that. So the short setup still play right there. You see, it hit there and it bounce back right away. That means we allow to short them when hit that. That's the only confluence we have. So how do we play that trade? Well, we play right here. We see right here, right, is a auto block. We should here for the gap, the retest right there, and then the moving out displacement, and we see the retest, right? Instead of the retest, it not even reached that retest yet, right? In order to sustain it move up, there will be no sell side liquidity trap. You have to make a little bit right here, take the sell side liquidity right here from here, then we know this move is legitimate move up. However, it trapped the buy sell side liquidity right here. So this one is a fake breakout right there. That's why we named this new setup that we call is a equal high. And another special is it create an equal high right there. Right after it make a new high, it create equal high right there, right away. That means it trap this. Either it trap this buy sell liquidity, or right here is no longer have. I mean the buy sell liquidity is no longer there. Now at this moment, if you have small sell side liquidity because it dropped all that, then this so become imbalanced right there. Then it gonna move to where it seeks the balance, which is a huge sell side liquidity down here. It dropped here, so it moved very quick right there. That's the reason why, you know, it moved very quick for very low resistance right there. Because when it created equal high, it tells you something right there. That means there's no more buy side liquidity up here. It's all huge sell side down here, so it's the reason why it moved very fast. Not much resistance right there. So that's the reason why we named this setup is the equal high, because the equal high is very special. I mean, normally not create at all, but when it create, you have to pay attention. Just this fake, you know, breakout and the short setup. The rationale before that is that whenever you see it create equal high and you look where the price come from, it come from the sell side liquidity will drop. Then we know immediately it's gonna go down. Then our entry is gonna be what? On the candle that it create equal high, and then we're gonna entry on that candle when it leaving the prior candle, upload candle right there. So basically when it leaving this, we're going. That's an idea. Okay, let's see. So here's our rationale right here. So you have a self-liquid trap, and here we have so-called order block. In this case, bearish order block, retest failure, right? We're supposed to have this retest and continue to go down to check the sell side liquidity, right? But it did not. Instead, it going up. It's a very surprise move. So this move is just a manipulation move right there. And in this manipulation move, it leaves the signature for us. How do we know? It created equal high right there. After it create a new high, it create an equal high, right? Follow, and you see that, and then you see self-liquid trap, and then after the equal high, then we take entry on the Ikai candle when it's leaving the prior upload candle, which is this candle right here, and our stop loss just 5 cents above the equal line right there, and then we have a huge target down there, self-liquid trap, which at least at this level it will move past that. And then we know that from the previous one, we know it's gonna move down to what? To the sell side liquidity at this level right here we identify. So we need to make the note right here. The target should be sell side liquidity at 44650. Yep. And this one is what? Yeah, we need to do, we already mentioned that, right? On 4-hour time frame, we have a short setup, right here. That's 1-hour time frame. Right here. We have a source up right here, right? Bearish breaker, displacement, huge gap, and this is a retest right there. So we can go in and short right there. Let's take a shot right here. So what do we have? Have bearish breaker, fair gap, retest. I don't put the bearish right here, so it's either bearish breaker or bullish breaker. They are the same idea right there. So I just put generalize them with just shape breaker and fair gap, retest, and it is short setup, so we know there's gonna be a bearish breaker right there. Here's the bearish breaker right there. Here's the fair gap right here, and here's the retest. And our target is right here on the so the risk reward, I think we are past the time 4 minutes, so because I want to keep only 30 minutes, I don't want to go too long, but let's recap the risk reward ratio, right? Look at this reward, right? So basically, if we are enter right here when it leaves in this candle, then what are our risk reward? 40.78. So basically we reach about 25 cents right there. Agree. Yep, 25 cents. Let's make it only 25 cents. Let's duplicate this and let's see how much we make. If we know that, we're gonna test this level and add 1201. Wow, 25 cents and you get $2. It's about 1 to 10 risk reward ratio. Beautiful right there. This is target here at 1102 and the risk reward is about, yeah, let's say 129. Wait, 25 cents and you get $2 roughly. Wait, it's roughly 129. Okay, I think that's it for today. We identified two beautiful setup, one short, and then the other one is long for a Monday. We learned a ton of lesson for today. Wonderful trade. Trading there for today for us. All right, thank you and talk to you later. Bye for now.